Right now, if you open up any news app in this country, there's a good chance you'll see the word recession somewhere on the front page. So let me ask you something. Is Australia actually in a recession right now? Here's the honest answer, and I promise you it's not the one most headlines are giving you. Technically, no, Australia is not in a recession right now. Not even close by the official definition. But here's the part that's actually far more interesting than a simple yes or no. The economy is going through its weakest stretch since the early 1990s. Unemployment just hit levels we haven't seen in almost 4 years. And there's a specific number, one that economists themselves are watching closely. That puts the odds of a real recession at somewhere around 1 in 3. So which is it? Is everything fine, or is something genuinely cracking underneath the surface? Stay with me, because by the end of this video, you're going to understand this better than most people who write these headlines for a living. And there's a decision coming from the Reserve Bank next month that could tip this whole picture one way or the other. Hey guys, Daniel here. Welcome back to Daniel Reports. If you're new here, this is where I break down the economy, money, and what's actually happening in Australia without the panic and without the spin. And this topic, honestly, is one where I think both sides of the debate are kind of right and kind of wrong at the same time, which is exactly why I wanted to sit down and actually walk through the real numbers with you. If that's the kind of straight talking content you're after, do me a favor, hit subscribe, tap that like button. It genuinely helps this channel keep growing and it costs you nothing. All right, let's get into the actual data. So let's start with the basics, because I think a lot of the confusion out there comes from people not actually knowing what the word recession technically means. A recession, by the standard definition most economists use, is 2 consecutive quarters where the economy actually shrinks, not slows down, shrinks. Now here's the thing, the most recent full quarter of data we have showed the Australian economy growing at 2.6% annually. That's not a typo. That's the fastest pace of growth this country has seen in almost 3 years. So if you're just going off the strict definition, Australia isn't just avoiding a recession, it's actually accelerating, which leaves us with a pretty obvious question. If the economy just posted its best growth number in years, why does absolutely everyone feel like something's wrong? Here's where it gets genuinely interesting. That growth number I just gave you, it's backward looking. It tells you where the economy has already been, not where it's actually heading right now. And the moment you look at anything more recent, the picture starts to look very different. The quarter right after that strong one, growth collapsed down to just 0.3%, down from 0.9 the quarter before that. That's not a small wobble. That's the engine visibly losing power in real time. And when you zoom out further, forecasters like Deloitte are now predicting growth of just 1.3% for this financial year. Their own words for it, and I'm not exaggerating this, were that the economy is going to, quote, limp along for the next 2 years. Limp along. Not collapse, not crash, just limp. Here's an analogy that made this click for me while I was digging through all this data. Think of the economy right now like a car that's still moving forward on the freeway, but the driver's foot has slowly come off the accelerator. You're not going backwards. You're still technically making progress. But anyone in the passenger seat can feel that something has clearly changed, even if the speedometer hasn't hit 0 yet. That's exactly the gap between the headline growth number and what people are actually feeling in their day-to-day lives right now. Quick pause here, because I know some of you are thinking, all right, Daniel, slower growth, fine. But does that actually affect me personally? Genuinely, yes. And the next part is exactly where you'll feel it first. Let's talk about jobs, because this is usually the first place real economic pain shows up before anyone officially calls it a downturn. Back in April this year, unemployment jumped up to 4.5%. That was the highest reading since November 2021. It did ease slightly after that, dropping to 4.4% in May. But underneath that headline number, underemployment, meaning people who want more hours but can't get them, actually crept higher at the same time. Here's how I translate that into real life. If you've recently felt like job interviews are taking longer to land, or your manager's been a bit more cautious about approving overtime, or a mate of yours has mentioned their hours got cut back, that's not a coincidence. That's this exact data showing up in real Australian workplaces. The labour market isn't collapsing, but it is clearly cooling. And that cooling is usually one of the very first warning lights that flicks on, long before any official recession gets declared. Now here's the number I actually built this whole video around, because I think it's the single most honest answer to the question in the title. Some professional forecasters are now putting the odds of Australia actually tipping into a technical recession at around 30%. Let's be really clear about what that number actually means, because it's easy to misread it in both directions. It does not mean a recession is coming. 30% means it's still more likely than not that we avoid one entirely, but it also doesn't mean everything is fine. A 1 in 3 chance is not a rounding error. It's a genuine elevated risk that professional economists are taking seriously enough to actually put a number on. And it's not just a local story either. The INF has been running its own scenarios on the global economy, and in their worst case outlook driven largely by the conflict in the Middle East and oil prices staying elevated, they see global growth sliding all the way down toward 2%. That's genuinely close to global recession territory. So Australia isn't sitting in a bubble here. Whatever happens globally over the next year is going to directly shape which way that 30% risk actually breaks. All right, so let's talk about why this is actually happening, because I think this is the part most headlines skip straight past. This isn't being caused by one single dramatic event. It's four separate pressures all landing at roughly the same time. First, the conflict overseas pushed oil prices up, and that pushed inflation back up right along with it, just as things were starting to look like they were settling down. Second, the Reserve Bank responded to that inflation the only way it really can, by hiking interest rates 3 times already this year, and there's a genuine chance of one more hike as soon as next month. Third, households are running out of the savings buffers that got a lot of people through the tougher years. That cushion is thinner now for a lot of families than it's been in a long time. And fourth, because of all of that combined, people are simply spending more cautiously, and that pullback in spending itself slows the economy down further. Here's my honest take on this, because I think it's genuinely important context. Economists will tell you a real recession almost never comes from one single shock. It comes from a combination like this, several pressures stacking on top of each other at the same time. And right now, we've got 4 of them landing together. That doesn't guarantee a recession, but it's exactly the kind of setup that makes one more likely than usual. Now, before this starts sounding like pure doom and gloom, because I promise you it's not all bad news, let me show you the part that actually made me feel a bit more optimistic while researching this. Consumer confidence. Basically a measure of how people actually feel about their own financial situation and the economy. Bounced back to just under 84 points in July, up from around 80 in June. Now, I'll be straight with you, that number is still sitting in the bottom 10% of this survey's entire 50-year history. So nobody's popping champagne here. But here's the genuinely encouraging part. A big chunk of that improvement came from something specific. The very worst case scenarios people were bracing for around energy prices, interest rates, and job losses simply haven't played out the way people feared they might. People's expectations around job security have actually improved noticeably too, and confidence about the right time to buy a home has been climbing for 2 months straight now. My take on that. Fear tends to peak right before the worst case doesn't happen, and that's roughly where we are right now. People brace for the absolute worst, and so far the absolute worst hasn't shown up. So what does all of this actually mean for you sitting there watching this right now? If your job is in an industry that's sensitive to spending, retail, hospitality, construction, this is genuinely a good window to keep half an eye on how secure your position feels. Not to panic, just to stay aware. If you've been meaning to build up a bit of a savings buffer and keep putting it off, this is honestly the environment where that buffer earns its keep. Slower growth years are exactly when unexpected bills tend to actually show up. And if you're waiting on a specific signal before making a big financial decision, buying a car, taking on a bigger commitment, keep an eye on next month's Reserve Bank decision. Deloitte is expecting one more rate hike, while some other banks think we might already be near the top. That single decision is going to say a lot about which direction this whole picture leans next. So let me bring this all together, because I know we've covered a lot of ground here. Australia is not in a recession. That part is genuinely true, and anyone telling you otherwise outright is overstating it. But this is also not a case of everything being fine, and anyone telling you that is underselling what the data is actually showing. Growth is slowing, but it's not negative. Unemployment is rising, but it's not spiking. Confidence is fragile, but it's actually improving, not falling further. Here's the honest way I'd sum up where we genuinely stand right now. Headlines love a simple yes or no answer. Recession or no recession, because that's what gets clicks. But the real economy almost never works in absolutes like that. Right now, we're sitting in the uncomfortable middle ground, and honestly, that's exactly where the real story is, and where most headlines don't bother going. If this actually helped you make sense of what's going on, drop a comment and let me know. Are you feeling this slowdown personally in your own job or spending, or does everything still feel pretty normal on your end? I read every comment, and I genuinely factor what you guys are telling me into future videos. And if you've got a mate or a family member who keeps sending you scary headlines about all this, do them a favor and send this video their way instead. Context beats panic every single time. I'll be keeping a close eye on next month's Reserve Bank decision, because depending on which way that goes, this whole story could shift again pretty quickly. Hit subscribe if you want to stay ahead of it rather than finding out after the fact. I'm Daniel. This has been Daniel Reports, and I'll see you in the next one.